So
Yes.
what's our next topic?
Let me check here on the schedule. Just a second, I'm trying to. It's
Cycle formation and selection, yeah.
cycle formation selection, then liquidity.
Okay. But you finish mirror time frames, yeah.
Yes, we finish mirror time frame. Cycle formation and selection.
Okay. Formation. Now, when we talk about the cycle formation and selection, now this way
Yeah.
we're going to look at which cycle do you gonna use, which kind of trader are you, or what kind of setup are you going to be looking at. Now, here we have what we call position traders or position trading. We have what we call the position trading. You have the swing trading. You have the swing trading. We have the intraday. Intraday swing. I have the intraday itself. Also have the scalping. Scalping. So now, when we are dealing with this kind of trading, we always choose a certain cycle we're gonna be using. Now, when you're going to be looking at the position trading, meaning that we are going to be using the affirmative time frames, where we are going to be looking at the monthly. Though we don't teach them, but we don't teach them, but because now many people are not interested in position trading, not so we don't use them.
Yeah.
But when you're using position trading, we start from the 3-month time frame. We start from the 3-month time frame, then drop to the what time frame do we drop? We drop to the weekly time frame and then end in the daily time frame. Sometimes we may also use the day month time frame at our confirmation time frame when you're doing position trading. Now, if you want to do position trading, meaning that you're going to select the monthly at the 3-month cycle, because now the time frame coordinations or the cycle that we are going to use as our constant time frame. Here, when you're doing the position trading, the 3-month time frame is going to be your constant time frame, which means it's our cycle. So the cycle means which time frame are you going to be using as your constant time frame. So whenever you are using the 3-month cycle as your constant time frame, it means that you're going to be using the 3-month cycle, meaning that you're going to be following the coordinations of those time frames. Okay, but we are not interested in what? Position trading. But when doing position trading, we focus on all of these bigger time frames, and more of the position trading, we take our entry based on the 4-hour, on the daily, meaning that when you're doing position trading, it means that you always have a higher risk. Okay? Because when you're taking your entry based on the daily time frame, mean that you will be having over 100 pips plus stop loss, but the target 100 pips plus stop loss, but the target is going to be good. Okay, because when I'm doing position trading, this is a small stop loss of 100.
Yeah.
The small stop loss. Let's assume now you're having this on a 3-month time frame, meaning that whenever price comes, price will take a long time to come inside this area. It will also take a long time for price to perform a shift point. It will also take a long time for price to come to the area of liquidity available or take the engineering available. Meaning that for a position trading, you need to be patient enough to wait. Because now, if this is an area of liquidity on a 3-month, it will take like a month for price to drop from this area here to come back to this area. Could not so?
Yes.
It will take like a month, not even a month, even 2 months to come back to this area of liquidity. Okay, so whenever price comes to this area, it will also take another month to shift. It will also take weeks to shift. It will also take a long time to give the confirmation entry. That's why we do drop to the daily time frame to look for the final confirmations and then use it as the entry. But when you're doing the position trading, it doesn't mean that you should have a small stop loss. Even if you have a stop loss of 200, so long as your your target is crucial, it means if you're targeting this area here, mean that this 200 pips stop loss is going to be a small thing, but it's going to give you something better. So we don't need to select that cycle of the position trading because we have to wait for a long period of time. That cycle is for those people who have big capital, who are always busy. Okay, all those people who are more advanced than us, those are the people who need that position trading. Okay, yeah,
Yes.
because for us we don't need it. So never use that cycle from the 3-month.
Meaning with the position trading, you might take 3 trades in a year.
Yeah, it might take 3 trades a year, but those trades are going to give him more than you think. They just reward him a lot of money because he has been patient and waited for the right opportunity. So now that cycle, you may try to use it. I'll show you how to, if you want to use it, we shall backtest some trades based on that cycle to see if you can be patient enough to use that cycle. But I don't recommend someone to use that cycle because you have now to be patient. You're not being patient. So,
Yeah.
but there's a trade I took based on that cycle. There's also a trade I took based on that cycle. It was this DBP card. Yeah, I took it based on that cycle, but I was lucky that I found it I found it in that 3-month area of liquidity, and it has already performed a shift point that I wanted. So it was just a walkover for me. That's why
You're still holding it?
no, I exited it. I was good with 20K. You know, when you're good with the profits, that doesn't mean that now you should hold it for so long, because now this is what give us disappointments, because sometimes you hold a price and you happen to see what, but it was long time.
Drawdown, sometime drawdown from 20K to 5.
Yeah. So the entry was based on was it a type? It was from a type. It was from an area of liquidity, but we shall look at it. But I was patient enough until when I made my 20K, I exited that trade and went to do more nothing. So that cycle isn't for us at the moment, unless you decide to be position trading. But for position trading, you need to have a good amount of capital, because now you're going to be risking high, or you're going to be risking a lot, but also the target will be good. Okay.
Yeah.
So let's look at the position trading, or the swing trading maybe. So the swing trading, we have now to select the best cycle. What cycle do we use for swing trading? What cycle do you use for swing trading? So now, this is where we're going to also look at the FTA, the furthermost deviation that we shall look at when we finish covering. When we finish covering